What happens to the SCHD ETF if the parent company of the popular dividend growth ETF, Charles Schwab, the largest brokerage in the USA with over $7 trillion in assets, goes bankrupt? Well, in this video, we are going to dig deep into this important question, as many of us actually have a large amount of money, and maybe even a large amount of our net worth tied up into the SCHD ETF, which is of course tied into Schwab, and figure out exactly what would happen if Schwab does go under, and exactly everything you should know and how to be prepared, etc. So make sure you stay tuned because we have a lot to go through. Right after you, please drop a like in this video and subscribe for more future content like this. So for those that might not be aware, SCHD, the Schwab US Dividend Equity ETF, is one of the most popular dividend growth ETFs that's ran by Charles Schwab. Charles Schwab just announced recently that they plan to cut jobs and close offices to try and save around $500 million as layoffs spread across Wall Street. The article says Charles Schwab is cutting an undisclosed number of jobs, the firm said last Monday. Cuts are related to the integration from TD Ameritrade, which was acquired in 2020. The brokerage expects the cuts to save about $500 million annually. The article then said the company did not disclose the number of employees it was going to lay off and did not immediately respond to the request, but several companies across America, including Wall Street banks, have trimmed their workforce this year in a bid to rein in costs amid still high inflation and deal-making slump due to higher borrowing costs. Now, because the Federal Reserve has consistently been raising rates over the last year or two now, it's been putting a lot of pressure on banks, especially banks and firms that do have a lot of money tied up in lower yielding assets. Because simply put, if a bank is earning say 2 to 3 or 4% on their money, but the interest rates are now above 4%, the bank is effectively running at a loss. So for the SCHD, the Schwab US Dividend Equity ETF holders out there that might hold on to hundreds or even thousands of shares of this popular dividend growth ETF, they might be wondering if their shares are actually going to be safe moving forward, and of course questions like what would actually happen if Schwab, the holding company of SCHD, was to see more struggle ahead and possibly even collapse. Well, in this article it says if rates stay stable or go lower, then Schwab will be fine, says former banking consultant Jonathan H., now president and manager of Integra Capital Management, a private equity firm. If rates stay elevated or go higher, then Schwab will likely lose their bank subsidiary because the financial forces will be above even their ability to finance, he adds. 100 basis points above the previous 10-year Treasury peak would be enough to cause a client exodus crisis. Absent a serious capital raise, he cautions, if a crisis at the bank goes out of control, it would damage the entire entity, primarily through loss of business, he adds. This article also goes on to say Schwab can sustain more rate hikes from the Federal Reserve, Wrong says via email, thanks to a couple of factors. The bank's security portfolio is largely tied to long-term interest rates, not the short-term rates that the Fed Reserve directly controls. But it's possible that the Federal Reserve raises the federal funds rate, but long-term rates don't move all that much. Now, an example of this is that the Fed funds rates currently increase 25 basis points, but the 10-year Treasury yield is down 40 to 50 basis points. So even though the more near-term short duration change more drastically, the longer-term duration don't move as much. Now, also important to note about Charles Schwab is that Schwab has other strengths too. An estimated $100 billion of cash flow from a mix of interest payments on bonds, cash on hand, and net new assets likely to come throughout the year. It can also raise $8 billion a month in broker deposit CD sales, the WSJ reports, but that comes with its own risks, of course. Schwab also has access to over $300 billion in liquidity from short-term debt facilities, including the Federal Home Loan Bank, or the FHLB, and the Bank Term Funding Program, launched after the whole Silicon Valley Bank situation happened. Now, just thinking for a second worst-case scenario, in the case that Charles Schwab goes under, and SCHD, of course, being under Charles Schwab's umbrella, if you will, what would happen? Well, this right here says it's unlikely that Charles Schwab Corporation will go out of business anytime soon. Analyzing the issue from much longer-term perspective will create a different answer. However, corporations can change over time. If Schwab ever did file for bankruptcy, remember that both its banking and investment divisions are protected by FDIC and SIPC, respectively. This means that deposit accounts are insured up to $250,000 per depositor, and brokerage accounts are protected up to $500,000 according to number of shares, not share price. When a brokerage firm does go out of business, it typically is sold to a rival company. Very similar to the whole SVB and First Republic Bank situation. Earlier this year, we saw multiple banks go under, and they were sold to bigger banks, and it felt like it happened almost immediately. So if Charles Schwab did go out of business, your Schwab brokerage account would most likely be transferred to another brokerage firm, and your Schwab deposit account would move to another bank, all without much fanfare. So in the end, there's not much to worry about. Stock prices are another story altogether. But I want to hear from you guys down below when it comes to the Charles Schwab controversy of layoffs and the unsure future of SCHD. Are you currently still buying shares of SCHD as of now? Or instead, are you choosing to stay away from this ETF? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.